Hi everyone, just been on CNBC down the other end of Times Square there, and I thought I'd give you the old tourist look here. So basically we're going to see Hamilton actually, so it's not without reason that I'm in Times Square. CNBC is behind me down the bottom end by the ball there, and we were saying Mickey Mouse trade, go long tankers, go short EV makers. I think the Chinese are going to come and get those poor EV makers. BYD is crushing it. These things are just batteries on wheels, you know, and so I don't know how well any of these things are going to do. On the tanker side, you know, there's a few names that we'll highlight in the research, but basically it's, you know, she said on CNBC, Karen, who I have a lot of respect for, I was like, dude, don't you think you missed that one? But in reality, what I was saying is the history of the tanker stocks is so poor in terms of mistrust and disappointment that actually if they can sustain a run here, which structurally could be supported by lack of capacity additions and general very high demand for oil, as much as chemicals and everything else. You know, tankers could be a very good place to be if supply is the problem, which it kind of is. And of course, the rerouting, as we all know, out, you know, to avoid the Red Sea is just adds days and dollars basically. So that's that. The other thing we wanted to talk about, there was a lot of media interest today in BP confirming Murray Oceans Plus. Nobody knows how to say his surname, they call him Murray. You know, that was a little bit of a disappointment, and I had loads of London media calling me about the fact that we were hoping basically for change at BP in a big way, which would we think have involved an external CEO. And you'll see in the FT I was quoted saying, you know, look at what Exxon achieved since Kathy Mickles came in, exterior appointment as CFO. You know, how much of it's due to Kathy. It's all part of a change that's occurred at Exxon thanks to activist engine number one that has been extremely positive, and it's clear that you sort of need to break the spell or whatever BP's under, break the curse that BP's under. It's been really easily the worst performing and consistently the worst performing big oil since the disastrous strategy shift that you saw in 2020, where they said they were going to reinvent themselves as a renewable energy company, and subsequently that's just been a disaster. They just didn't have the market implied cost of capital to start moving away from oil and gas and into renewables. What they should have done is said, we're going to heavily cut capex, maximize free cash flow to the absolute max, and buy back an insane number of shares over the next 10 years. And in 10 years' time, the company will be 40% smaller, 50% smaller. That way you satisfy the environmentalists, you satisfy the guys on Wall Street, you satisfy the City of London, because you generate huge cash return to shareholders. They should have just forgotten about this whole renewables thing. They had no license to do any of that stuff anyway, and they certainly didn't have a market implied cost of capital to do it, which seemed, what I'm saying is that BP share price is so low that the market doesn't trust them to invest in anything, let alone wind offshore Long Island, which by the way has been pretty much an 800 million write-down within 2 years of them announcing they were going to get into that stuff. So that was BP. The one that we like on the management side is very much Permian Resources, very highly regarded, two young 30-something CEOs getting it done in the Permian. Permian Resources, almost unknown company, came out of private equity and is now a 10 billion market cap, 300,000 barrel a day company that we've got as our top pick for 2024. What's other good examples? Well, another good example of management where we're like, I don't think these guys are going to get it done at all is Apache. You know, APA, you know, they've just done a fairly expensive deal for Callan, and we just have zero confidence that the management, which bought you Alpine High and a couple of $1 billion of write-down on that one, can actually deliver. What's a management that we really like? Diamondback. Fang, another Permian play, might be the buyers ultimately of Permian Resources, but Diamondback is a great example where really good management with really good cost control really get it delivered. Valero in refining would be similar, and we've been positive on Dyno recently because we had such a positive meeting with the new CEO there. Dyno, the Mid-Con refiner we've been highlighting, is well exposed to the California market, which is going to be more and more import dependent over time because they don't want to produce the oil and refine the oil in state. They're just going to have to import it. And Tourmaline is another great example of a great company with great management. I should also mention CNQ has been, when you look at the big cap oils, who's outperformed. You know, on the same chart I published at BP, systematically underperforming for several years now. The one that's systematically outperformed has been CNQ, and that's all about great management. Also, a guy called Murray, interestingly enough. Have a great day. I'm off to see Hamilton.